At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, August 22, 2023, Nvidia just hit a new 52-week high. Nvidia stock hit a new high today. Nvidia stock is a hot topic as it reaches a new 52-week high. That comes ahead of its earnings report tomorrow. That report could act as a catalyst for shares of Nvidia stock. Nvidia, Nasdaq NVDA, stock investors are celebrating on Tuesday as the computer tech company's shares hit a new 52-week high this morning. That new 52-week high saw shares of Nvidia stock peak at $481.87 per share shortly after markets opened this morning. That surpasses its prior high of $474.97 per share that was reached on July 18 of this year. Investors will note that Nvidia has been a hot stock in 2023 as the market continues to favor artificial intelligence shares. The company is a major player in this space, with its graphics processing units being vital to training AI. Adding to this is Nvidia preparing to release its upcoming earnings report on Wednesday. Analysts and investors both have high hopes for the company. If it beats out Wall Street's estimates, that could be a catalyst that sends Nvidia stock higher tomorrow. What to expect from Nvidia in second quarter? Wall Street is looking for Nvidia to report earnings per share of $2.09 during its second quarter earnings report. To go along with that, analysts are looking for the company to report revenue of $11.22 billion for the quarter. To put those numbers in perspective, Nvidia's earnings report for the second quarter of 2022 included EPS of 26 cents alongside revenue of $6.7 billion. That means it needs a year-over-year increase of 703.8% and 67.5% for EPS and revenue to match Wall Street's estimates. Nvidia stock is down 2.2% as of Tuesday morning but is up 222.1% since the start of the year. Will the ARM IPO create the next Nvidia stock? Nvidia may finally have a rival chipmaker to compete against. One of the United Kingdom's leading chipmakers is getting ready to go public. ARM is gearing up to start trading soon and investors are waiting eagerly. This important trading debut could potentially pose a threat to Nvidia, although the two firms have some differentiating features. The artificial intelligence arms race is about to enter an important new chapter. ARM, a UK chipmaker, is getting ready to launch its initial public offering. This stands to be one of the year's biggest trading debuts. And, while many investors are watching closely for the ARM IPO, the new ARM stock could pose a threat to one of the tech sector's most dominant firms, Nvidia. Nvidia has benefited from the AI boom like no other company, riding it all the way to $1 trillion market capitalization. But if ARM makes a splash with its debut and starts trading well, it could cut into Nvidia's market share, pushing Nvidia stock down in the process. Demand for the products these companies make isn't going anywhere. Still, strong competition from the other side of the Atlantic could definitely pose a threat to dominant US chipmakers like Nvidia. What does the ARM IPO mean for Nvidia stock? There's no question that Nvidia is a leader among US semiconductor producers. It trades well above many competitors, reaping the benefits of supplying the chips behind ChatGPT, for example. Over the past 6 months, Nvidia stock has surged around 120%. When the company reports earnings on August 23, Wall Street analysts expect shares to surge even more. So, Nvidia stock is poised for further growth, at least in the short term. Investors should be more focused on the longer-term picture, however. Specifically, they should be concerned with what the market presence of a new chipmaker with reach to rival Nvidia could mean for US chip firms. Nvidia stock has held its own against domestic rivals as US companies have doubled down on chip production. But ARM poses a unique threat that shouldn't be underestimated. And it's going to begin trading with a high valuation of around $64 billion. As Barron's reports, that would be a hefty valuation for a company that generated $2.68 billion of revenue in its most recent fiscal year and net income of $524 million, implying a price-to-earnings ratio of around 122 times. It would suggest ARM is hoping to be valued more like Nvidia than other rivals. Granted, There are some key differences between these two chipmakers. Nvidia produces graphics processing units, while ARM focuses more on licensing designs for central processing units. Additionally, ARM is heavily exposed to the smartphone market while Nvidia's chips are primarily used in things like gaming and crypto mining. The company has also found a lucrative niche in helping power data centers. This lack of direct overlap could allow the two companies to somewhat coexist. One analyst has speculated that ARM looks more like Qualcomm than Nvidia. That doesn't necessarily bode well for ARM stock, either. Qualcomm stock has struggled a bit this year despite the AI boom bolstering tech stocks. Why it matters? Even as momentum builds for the ARM IPO, there are still reasons to approach the debut with caution. The company is primarily owned by Japanese holding company SoftBank, whose shares are struggling today. That said, SoftBank's performance could be due more so to negative market momentum and is not necessarily connected to ARM. Nvidia stock is also down today but is likely to rise again after reporting earnings tomorrow. Investors may be tempted to turn to ARM stock for new AI exposure once it begins trading. While that may raise some doubts about Nvidia, it doesn't necessarily mean that the two stocks can't both rise on growing chip demand. Thanks for watching.